The recent real estate crisis in China has snowballed into a massive problem for the second largest economy in the world. Real estate companies have defaulted on huge debts, and growing animosity among consumers is making everything worse. How will this financial crisis affect the world? More importantly, how will it affect you and your plans for the future? We appreciate all the support you've shown our channel. Now, let's get right into the video.
Massive protest over frozen bank deposits turned violent in Zhengzhou in China.
A large group of very angry demonstrators faced off with the police and the staff on Sunday in the city of Zhengzhou. And they did this to protest against the financial scandal that has now grabbed the attention of the entire nation.
Xi Jinping's China is a saga of nightmares. We told you about their banks in crisis. 4 banks in China recently failed. Depositors fear they could lose their life savings.
China's economy has slowed to its lowest rate in decades due to a confluence of factors, including weak consumer spending, a growing mortgage crisis, closures brought about by the zero-COVID policy, and dwindling faith in the administration. The International Monetary Fund has predicted that China's economy will improve at its weakest pace ever in 2022. The National Bureau of Statistics reports that industrial production and sales remain stagnant and that the number of unemployed hit a record high of 19.9% in July, up from 19.3% in June. In the meantime, urban unemployment reached 6.1% in April before dropping down to 5.9% in May and 5.5% in June. It is believed that 15 million young individuals who have the highest levels of education are currently unemployed. Many individuals have lost all confidence in the private sector and are instead accepting lesser-paying jobs with government firms. People in China are growing tired of the incompetence of their government, and the CCP is so concerned about what might happen that they have brought soldiers out into the streets to maintain order. Protest movements are taking place against banks all around China. Stability in society is challenging to achieve if its members are unhappy. The Chinese economy has been collapsing on multiple fronts since the start of 2022. Once thought to have an economy stronger than the United States, this nation now appears so frail that it could collapse in an instant. The growth forecast for China in 2022 has been reduced to 3.3% by the International Monetary Fund, which is the slowest pace in the past 4 decades. According to the World Economic Outlook published in April of 2022, growth is predicted to drop from 6.1% in 2021 to 3.2% in 2022. Additionally, the IMF has lowered its estimate of world growth to 2.9%, which is 0.7% less than its April projections. If the economy of the country with the world's second largest economy is teetering on the brink of collapse, how will it affect the rest of the planet? The most pressing question is, how does this affect your long-term financial plans? You're probably saying that everything is going down in China while I'm here in the United States. Well, let me tell you that you're wrong. The question then becomes, what does this have to do with you and your plans for the future? The impact that China has on the world will be considerable, to say the least. As a result of China's GDP predictions' ongoing decline, several of the country's economic foundations are currently collapsing, and it appears that the fading superpower has no immediate way out. The US economy and investments throughout the world are both impacted by China's economic decline. Despite the government's denials, it is evident that China is in a state of anarchy. Moreover, the country's economic development is reportedly at an all-time low. The mortgage issue is putting a strain on financial institutions, and the overall health of the real estate industry is disastrous. As a result of the prolonged construction delays, homeowners are already fuming, and a boycott movement has begun. Over the past year, new homes in China have become less expensive, and several significant developers in the country have fallen behind on their obligations. Because of the dire status of the real estate market in China's eastern regions, a number of real estate companies have begun to take fresh food as a kind of deposit payment on newly built homes. The value of China's real estate market has dropped by that much. Between 2011 and 2020, the real estate market in the country experienced exceptional expansion, with prices tripling, sales tripling, and sold areas increasing by 60%. In 2020, sales of newly constructed homes reached a record high of $2.2 trillion, 7 times that of the United States. Yet the boom encouraged speculation, and the Chinese middle class loaned excessively from financial institutions. George Magnus estimates that by 2021, debt levels would exceed $10 trillion, up from almost $2 trillion in 2010. This would represent a ratio of debt to disposable income of around 130%. Evergrande's collapse in late 2021 ushered in a period of severe property market decline. However, the actual difficulty didn't start until the Evergrande Longting project in Jingdezhen City, Jiangxi Province was put on hold because there wasn't enough money to finish it. Due to its inability to pay off its financial obligations, which totaled more than $300 billion, the corporation went into default. As a result, other real estate firms, including Shinmao and Sunac China Holdings, fell behind on their loan repayments as well. Even more frightening is the fact that the real estate industry accounts for 24% of China's GDP. As a result, policymakers have lowered credit market rates in an effort to ease the debt load of housing developers, and local governments have been granted the ability to design laws that better match them. Shanghai's local government has responded by loosening limits on home buyers in both the city's most affluent neighborhoods and its more modest outlying ones such as Beijing and Suzhou. Still, the property prices and sales volume barely budge under the influence of these policies. The real issue, however, is with the real estate developers, who are trapped in a mountain of debt and are having a difficult time meeting their monthly loan obligations. However, customers have been reluctant to cover the cost of the mortgages on uncompleted construction. The adverse trend in the property market gained momentum, and at the moment, 320 projects worth approximately $145 billion are not being paid for because of payment boycotts on roughly 100 localities. Pre-sales account for 85% of all home sales in China, and mortgages are typically taken out several years before buyers take possession of their new homes. On the other hand, considering COVID-19, the current state of the economy, and the fact that developers are experiencing liquidity challenges, it is quite clear that property developers will not be able to uphold their agreement with the buyers in the near future. The present scenario appears to be much direr than merely the case of Evergrande, and it is anticipated that an increasing number of projects will fail as soon as the financial flows of developers become depleted. As a result, buyers will become even more fearful, which will only make matters worse. China's real estate market is in deeper and deeper jeopardy the longer this cycle continues. If Chinese home buyers keep refusing to make their payments, the economic impact on the country as a whole could be devastating. According to the assessments of many experts, the scale of this disaster will be 100 times that of the financial crisis that hit in 2008. The primary justification for this bold assertion is that the bulk of these debts are secured by unfinished homes, meaning that banks are unable to reduce their losses by taking possession of a home in the event of a default. As stated previously, Chinese banks face grave risks from local populations as banks in the province of Henan blocked $6 billion in customer deposits. In addition to a lack of faith in the banking system, citizens also have little faith in the CCP's capacity to efficiently regulate the economy. China is home to over 4,000 financial institutions. approximately 1,540 of which are classified as rural commercial banks. Roughly 12% of China's banking assets are held by the country's rural banks, making them the most potentially dangerous financial institutions in the country. Typically, internet deposit systems were the main source of funding for rural banks. The goal was to broaden the source of funding beyond the traditional rural sector. Because the online platforms provide greater interest rates, typically about 4%, the amount of money being deposited increased dramatically. The issue, however, was that banks deposited their funds in riskier investments rather than in risk-free savings accounts. For example, if a bank fails, the CCP will cover savings accounts but not investments. Under mysterious circumstances, the CCP carried out arrests of major owners at 4 different banks on charges of severe financial wrongdoings. To make matters worse, the majority of China's rural banks use the same strategy, and when combined with mortgage buy cards, it could lead to a severe liquidity crunch in the banking industry. What are your thoughts on China? How do you think their situation will affect the rest of the world? Share your insights in the comment section down below. If you enjoyed this video, kindly like and subscribe. And we'll catch you on the next one.